When's the last time you stepped foot into a Kohl's department store, let alone even saw one? Guys, I honestly thought Kohl's was bankrupt. I completely forgot all about that company, all about that stock. Yet here we are. They are announcing earnings first thing tomorrow morning. What's up, everybody? Welcome back to another day of trading, another day, another Delta. I am Michael. Today is Monday, March 11th, just after 11 p.m. here on the Pacific West Coast. I had a crazy work day today, so I was not able to actually video any of my trading. However, we are going to do a quick review of this earnings play I put on in Kohl's. Let's get into it. So, guys, KSS, Kohl's. I was actually really excited when I saw this come across my screen because on my account, I'm trading about $2,500. The position is worth, let's see, the stock is worth a little over 27 bucks. So for me, my small account, I'm only tying up a few $100 in buying power. Look at this, almost $300 in buying power. So this is what we like to trade when it comes to earnings. So let's just hop into the chart here. So if we're looking back for the just about a year here, you'll see, you can tell we're coming up to earnings. It's just a side note. You can see we're coming up to earnings here because the implied volatility rank right here, it's creeping on up. So right before we announce earnings, you can see here, earnings, boom, volatility crush, boom, volatility crush, boom, IV crush. So basically what we did is we put on, and we can chart it now too. So we put on the 22.5 put strike and the 35 call strike. We sold a short strangle. So if you see here, let's do the 22.5. So the 22.5, and I already forgot, guys, what did we do? 22.5, 35. So let's throw on the 35. So basically here, and then if we really wanted to, just in case this thing runs away from us, we can put on the time level just so we can see visually exactly when we put this thing on. So basically what I did here is I'm fairly neutral on where Kohl's is going to go. So I wanted to give myself enough breathing room on the downside as well as the upside, because you never know. There could be some Hail Mary coming out when it comes to earnings. So I basically, when it comes to earnings, I like to trade the weekly cycle, right? The nearest dated cycle, the nearest dated option, if possible, if there's enough juice in there, if there's enough premium. So I sold here the 22.5 strike put, like I mentioned. That's a 10 delta. So I'm collecting a pretty generous premium for selling that. So you'll see it was trading, what the mid price is 24 cents on the put, not too bad. And then I went way up, guys. I went way high and I sold the 7 delta call, the 35 strike. And I collected, I think it was like 13 cents just for this piece of it. So all together, I collected 33 cents in premium, and I'm risking, from a buying power perspective, I think it was like 280, let's call it. So even if we got $300 in buying power, if we did it this way, 33 divided by 300 will be a little bit generous. I'm going to be making 11%. Pretty much of overnight, 11% of what I am tying up. So that's not too bad. Now, on the downside here, typically when I put these trades on, I like to go around the expected move. This orange bar here shows the expected move. So I would have ideally gone to the 23.5 strike in the 31 or 30.5 strike. But again, with these department stores, you can never be too sure. So here, the last price right here was 27.18. So let's do so 22.5 divided by 27.18 minus 1. So something did not happen here, guys. Live math. Let's see, 22.5 divided by 27.18 minus 1. So I basically gave myself a buffer of a little over 17% to the downside. So Kohl's can drop 17% and I'm still going to be walking away profitable. Now on the upside, we sold 35, so 35 divided by 2718. So that's going to be, that's almost 29% buffer on the upside. Probably I could have been a little bit more aggressive and actually move this thing. Probably could have sold the 34, 33 strike. In hindsight, thinking about it, I probably could have. Maybe I should have, but we'll never know. Again, I just don't want some crazy, awesome report come out that all of a sudden Kohl's is now going to be the next, Nordies or whatever else, right? So I played it safe. So we'll see. I put on a working order for basically to collect 3 cents. So you'll see here my working order here for to buy it back at 3 cents. So in case I'm not in front of the computer and for whatever reason, because the market opens 6:30 a.m. here in my hometown, so I may or may not be in front of the computer depending what I have going on. So I like to put on that 3 cent basically for a strangle. Near stated, I like to buy back the option or the strangle for around 3 to 5 cents is what I put the working order. I just had a gut feeling that I could buy this thing back for 3 cents. And if not, let's say 5-10 minutes go by. If the stock isn't moving around too much, I'll just close it out for even if it's a 5 or 10 cent debit. So that's basically how I work it. No other updates, guys, really on my other positions. FXI we've been holding for, this is probably the most boring position I've had on in who knows how long. Guys, 21 days I've been holding on to FXI. That's 3 weeks. Literally zero adjustments, guys. Zero adjustments. We're just waiting for this thing to come in. I mean, we're 34%. We were at 40-something% of max profit before. But guys, I'm sticking. I'm being stubborn. We still have 38 days to go. So I just want this thing to come in. So if you see here, FXI, I mean, we're trending up a little bit. I keep talking about it. I might move this 21 strike. I might roll it up to the 22 level or maybe the 23. So keep an eye out for that. I might make that move tomorrow, but I don't want to really fix necessarily what's broken. You'll see here the 21 strike put. It's an 8 delta. So if we want to roll it up to 22, we'll get to the 16 delta, which is not too bad actually, which it might be the move. And we're still collecting, a decent credit, 11 cents. I'm actually not too bad, not too upset about that. So maybe we'll make that move tomorrow and just further, add to our break even on the upside. So moving on, GDX, guys. GDX not doing so well for me. So for whatever reason, the chart isn't even working. Right now, it's not even loading. This is probably that bad. But look, guys, we're pretty much in breach territory, right? My 31 call is about to be touched. So it's basically about to be tested. Might as well be tested already at this point. So if I'm getting a little too nervous, so I used to just let the positions, I basically used to adjust as minimally as possible. But I've learned over the years, that I prefer to basically adjust my positions, roll a little bit more aggressively, not too aggressively, but a little bit more, because I would rather get whipsawed having enough credit collected than this position just run away from me and I have no premium to show for it, and I'm basically, SOL, right? So probably what I'll do tomorrow is roll this 26 put up to the 28 strike, and that should give us enough padding. So, if that chart ever loads, we'll have to come back to that. Intel, guys. Intel, we are getting a good move that we want. So we're coming back up here to the 46 strike, which is basically where we are straddled. So I have an iron fly, which is basically a defined risk straddle. So it's a short put spread and a short call spread where the short strikes are exactly the same. So we want this thing to end up right around the 46 level. I'm slowly getting, the premium is slowly coming back out of this thing. This was an earnings play that I've been holding on to since January. So it's nearly 2 months, but you know what, guys? I'm stubborn and I want to stay in this thing. So let's see, GDX. Let's go back. Okay, great. The chart is now populated. So look at this thing. It's just been ripping. All rip, no dip. Look at this. 1, 2, 3, 4, 5, 6. We can maybe count this as almost 7. 8. So 7 or 8 days. It's been up 7 out of the last 8 days, guys. Look at this thing. It's vertical moves. So I don't know what else to do other than roll this thing up and stay true to the mechanics. So follow along for that, guys. Probably I'll make that adjustment tomorrow. IWM, this is, I want to say, guys, textbook iron condor. Textbook. We're just going to let this thing sit. There's nothing for us to do here. I haven't made basically any adjustments, and this position has been on for, I don't know, let's see, 12 days. So nothing really to do here, guys. This is best case scenario. Skipping over Kohl's because we just did that. SPY, guys. SPY. I mean, we finally got a couple down days, right? I mean, we were down what is this? 8 basis points? Nothing, guys. So, I mean, we're coming back down. This is all we can ask for, right? Like, just slowly come back down. Not too quickly, but slowly come back down, and we'll make some money. So that's pretty much what I got going on, guys. I'm not too sure, my buying power. I'm like right around $1,000, which is where I want to be. GDX is basically tying up a good chunk. So we typically on this small account, we want, between $200 and $300-ish being tied up. But, the stock is moving closer to our short call, which of course is increasing the buying power needed. So that's basically it. Well, that's all I got for you today, guys. As always, any questions, comments, trade ideas in general, anything you're working on, drop them in the comments down below. I love learning with you all, as I hope you love learning with me. If you haven't yet done so, please give this video a big fat thumbs up so I know I am doing a good job. Don't forget to subscribe to this channel so you don't miss any new videos coming out in the future. Until next time, guys, take care.